Hey guys, welcome back. In today's video, we are talking about the AMC truth, how the short squeeze is cooling, why margin is crashing down, and many more in this video. Firstly, take a look at this. Look at this again, volume doesn't lie. Billions in volume switch hands, then low volume sell-off up until 2025. And once again, we're looking at, essentially understanding where AMC is at. Now, of course, we're always going to be looking at different factors, different perspectives. And this is something we've covered in the past, so I'm sure everyone is familiar with what's going on right now. But essentially, this is just further proof of obviously what is happening, of the volume that's being hidden away, of understanding why the price action doesn't actually match the volume, and how we know that the price is obviously fake, that we're just watching the suppression and manipulation happening in the market. And then it's why we talk about how we are owned so much more in terms of where AMC price should be. You can see, how do we explain that monster candle with no real increase of price? They owe us huge for that candle, where we can take a look at this for AMC, how in times when we see a drastic increase in volume, yet the price doesn't react. And we've talked about why they obviously do this, how they've done this, but it's just to further explain and understand that when we say that AMC's real price discovery should at least 100x, 200x, 300x, it's because of past data that has shown us we deserve so much more than where we are now, because we're not just then looking at the fundamentals, despite the fact the fundamentals is obviously showing great projections for AMC. Even the fundamentals is showing how undervalued AMC is, but it's about talking when you include everything else that's been talked about in the past, with the volume that should have affected the price but hasn't, when it actually then has an impact on the price, we're owed so much more in terms of where we should be at. And it's why institutions have been accumulating. It's why we understand that AMC extremely undervalued, and it's obviously why the apes have always talked about in terms of how we're beating these shorts, how we know that the shorts are obviously scared, and why we constantly are trying to obviously accumulate shares of AMC. But then let's take a look at where shorts are at right now. Now, we know that AMC is doing perfectly. We have the talks of potential interest rate cuts, which is obviously going to further decrease the interest payment AMC has to pay. We talked about the fundamentals of AMC improving, and will also improve even more as we're going in towards next year, the next few quarters. So AMC is doing well. But when you take a look on the other hand, for the shorts, they are doing extremely bad. And there are so many warning calls that are popping up now. You can see the phrase short squeeze is cliche, but when WSJ speculate, margin is hitting all-time highs, over 1 trillion for the first time ever, because short sellers need collateral, but then cliche away. So firstly, taking a look at where margin is at right now. So we're seeing how these institutions are obviously struggling, as we're seeing margin going higher and higher. Remember, the reason why margin is going higher is because certain short sellers are trapped in positions in which they then need even more money to make sure that position stays low. It's not to make sure that the position goes in profit, but it's to make sure that the position doesn't explode and they end up losing billions of dollars. And it's why they've borrowed trillions of dollars in order to make this obviously happen. And you can see short sell them need to post collaterals. That's what we talked about, investors who have borrowed shares. And so this is how we understand that the very short sellers who've been shorting AMC, who's been shorting GME, has been borrowing money for the longest time ever. And they've been increasing how much they're borrowing without actually paying back what they've previously covered or what they previously borrowed. And so their debt is only getting higher and higher. So when you look at AMC, AMC's debt is decreasing quarter by quarter, year by year. When you take a look at the debt for these short sellers, they're increasing quarter by quarter, year by year. And we're seeing how it's going even higher and higher because they need to suppress these positions. And it's obviously very, very bad, because we have to realize US margin debt is at an all-time high. I can hold longer than you can say Stolen comes to mind, because we have to understand for the people who are buying into AMC, they're obviously using no margin, or at least the majority. Obviously, I can't speak for 100%, but the people who are obviously buying shares are all buying the shares of AMC with money that they have, and then that's only one-time payment. You buy the shares, you put the money up there, and then that's it. There's no financing fee, there's no margin that you're putting up. For the short sellers, they're using margin to short because they need to short billions of shares of AMC. They're spending millions of dollars every single day to finance these positions. And so when we talk about who can survive the longest, who has the longest durability, it's obviously the apes. And we're seeing a time right now how their stress is only getting higher and higher. If those of you who've been paying attention, whether it's just up in general or on this channel, we talked about how banks have been failing stress tests. And this is just another indication of what's to come. And so we're going to be looking at all of these short sellers going and defaulting, whereas AMC is obviously going to stay extremely strong. The investors of AMC are going to stay extremely strong. And so you can understand why we're going to be seeing the short squeeze cooling. And then you see this. In other words, if price comes down on these assets, we will see a cascade of margin called as the collateral these are providing is keeping us afloat. So what we're looking at right now, whether it's with the margin going to an all-time high, whether it's with that government will take stakes in more companies, we're just seeing liquidity being injected into the market without an actual care of what's happening. Everyone is just putting liquidity into the market, and right now it's making it look like the market is healthy, it's making it look like the market is flourishing, but the actual fact is it's obviously not. Yesterday's video we talked about how majority of stocks right now are overvalued, and they're due to decline by 66% at any time. So this is just talk about how overvalued they are. And so when you understand the fact that right now we're already seeing stocks overvalued, and yet we're still seeing liquidity being injected into the market, you understand how this is inevitably becoming a bubble that's going to become so big, and when it bursts, it's going to make the problem, the situation, even worse than it's at right now. In fact, it's probably better for the market to crash right now than it is after they injected another 500 billion or after they injected another $1 trillion, because then, you know, it's only going to make matters worse. But right now, they're obviously trying to avoid that, and it's why they're spending so much money. But then we can understand is that when all of these things all come crumbling down, the one company that will survive is obviously AMC because of how well they're doing, and more importantly, because the investors of AMC will not come scrambling away, will not run away from AMC, because right now, AMC is not only not overvalued, but it's actually extremely undervalued. And so when we see all of these stocks are due for a decline of over 66%, AMC won't be seeing that 66% decline. And so in a time where all these stocks drop by 66%, you'll see how AMC will prove to be the worthwhile investments. And it's why institutions are accumulating, because they realize right now, not only is AMC an extremely good hedge for just the overall market, but it's actually going to be the safe haven for when all of these stocks come crashing down. And then you can see right now, when we see these institutions obviously trying to accumulate, they're trying to push the retail away because they realize how good AMC as an investment opportunity is. They're obviously trying to push AMC down below the max pain. They're trying to force retail investors to leave, and they're trying to obviously save money for themselves. The reason for this is because we talked about when AMC ends above max pain is actually causing a lot of problem for the short sellers. And we've talked about how this is very likely to lead to a gamma squeeze, is why we've seen previously when AMC ends above max pain, you're seeing how AMC is then going to lead off very, very strong, because the short sellers have already lost a lot of money, and it's why they need to borrow even more money to then recoup what has happened and then to try and then suppress AMC even more. And then you can see 20 million borrowed from the lender of last resort before market open, after 200 million last week plus 61 million in a special exercise for 5 days. Someone's been needing a lot of help to get through each day. So we've talked about everything right now, and we talk about where they are at. We talked about the margin depth at an all-time high. We talked about how they are, needing injections of liquidity. This is another form of injections of liquidity, but we're seeing certain individuals, certain institutions who are struggling a lot right now. And every single day, and bear in mind, this isn't that they need money to make a play. They need money to suppress a position. This is just they need money so that they can actually go through and survive in a day, just to stay afloat for a day. They need money just to do that. They need money just to function normally. And so when you understand the whole things that's going on, when you understand that institutions need to borrow money just to make sure that they can stay afloat, you know how big this situation is getting. And you know why these short sellers have been scrambling, trying to get shares of AMC, and why we know that the margin crashing down, the short squeeze calling is all going to happen. As always, known as financial advice, so do take a while, so so much to do your own due diligence and research, and I'll catch you guys next time.